Hi, welcome back to my channel World Through Veera. Today's topic share market. Share market people can consider one of the best investment tool available in long run. If you invest very regularly from the early age and in a systematic way, share market can give very good returns and create wonderful wealth for all individuals. Only thing is we have to have a disciplined approach towards our investment journey, and we should not be greedy while buying the shares or while selling the shares. You should know the entry of the time and exit of the share. Never trying to time the market. Market always have the volatility. Market is going to go up eventually. If we see, as we already discussed in earlier topics, share market always try to give very good returns provided you have a patience. After investment, you should allow share to grow, and you should see the companies which are investing. You should do research before investing. I take an example here. I myself was not into share market. I started my investment journey in 2020, but I always do my own research. I read graphs and money control for shares which I wanted to invest. I see what is the background of promoters, what is the business lines they are into, and what sector I am choosing. These are the three things I will always follow in the share market. I have invested into the telecom, power sector, few are infrastructure sector, and few PSU stocks. Power sector, I have chosen a beaten down companies which we already talked about, value creation companies. They are from their top to bottom they reached. So I am not saying that you have to always bottom out and then only buy, but you should always see from there the company will be going to grow, how it is going to perform, what is the promoter's background, what kind of they are into business, and what kind of investment they can able to do it. Any power sector, if you take any thermal power, at least if they have to start a 500 to 600 megawatts thermal power plant, they require a huge investment. And thermal always demands very huge investment, in the sense means at least 8,000 to 10,000 crores, sometimes it's a 30,000 crores. Very big group companies only invest, and power is going to be very demanding sector, evergreen, and ever require demand from the people and industry, normally going to grow in 15 to 20% power demand. Only thing we need to see, when we are investing, from there the share where it is going to go. If we see last 5 to 10 years graph, if that particular industry or particular companies exist in the share market, you can able to understand the patterns of the company, the price movement. You can see at least 2 to 3 times you are able to see some 20%, 30% growth in a calendar year. Then that kind of share you can enter. 50% of your money, please invest in this kind of shares. 30% of the shares, you should take it from the blue chip companies. You should invest remaining percent of your investment money into that sectors where you are able to make it at least 50% of the profit in a 2-3 years, and consistently these companies perform year on year 15 to 20% growth, and on an average you will get a 15% growth in your CAGR returns. And apart from that, there is a chance of earning some dividend also on and above this. So coming to the share market, Sensex CAGR measured in two ways: price return index and total return index. If we see last 20 years, price return stood at 13.4% and total return stood at 15.1% as on March 2024. If we see Indian equities over last 20 years, sector is very much outperformed compared to all other asset classes, real estate, gold, and other commodities. Any given point of time, if we see from the inception to till date, the share market is given 16% on and above returns. If we see last 20 years, average Sensex returns was 1200%. Over the last 10 years, it was raised by 200%. If we see world markets anywhere in long run given best returns. Take an example of US S&P 500 stock market index that tracks US 500 largest companies' performance last 20 years. It returned 340% at compounding of 7.7% CAGR with dividends reinvested, delivered 540 in 20 years. In 20 years, compounded at 9.8% annually. If we see Indian index, before investing into share market, what are the parameters you have to see? Index, what is the points it is given from the day of inception 1979 till today. If we see with dividend reinvested, index is already crossed 1 lakh points from base points of 100% in 1979. That is by July 2023. If we see without dividend reinvested, it is 82,000 plus and currently there. Sensex CAGR, if we see on an average, the market returns, it's at 12 to 15% based on the stocks we are invested. Sometimes people will lose their money by investing into the equities not because of exactly the company performance alone, because of the decisions they are taken, entry of time, they are trying to time the market rather than investing, they are trying to trade, they speculate in the market. These are the conditions. Share market will try to give a negative returns always and people will lose their money. If people invest in a share market, they can always decide what they are ready to lose based on their actions. If they invest 100 rupees, they may lose 100 rupees. If they invest wisely and try to manage the portfolio and balance the risk, they can always make a money. There is no upper limit. If we see example of few shares in recent past, last from Corona to till this time, the market is given absolutely a good returns. I can just name it on a few stocks. One is the best example, Sujalan Energy. And blue chip companies or PSU companies, most of the companies, if you take it in the railway sector or power finance sector or in a banking sector, all the stocks given 3 to 5x or more than that from 2022 till date. In the market, whoever is invested and they are there in 10 to 30 years plus, you just take the examples of Rakesh Junjunwalia, Radhakrishnan Damania. These people, they made abundant wealth in share market, consistently investing and keeping their investments always in a right place and holding the companies for a long time. Volatility or price up and down moments, they are not bothered. They know how this company is going to deliver in a long run. They stick to those companies. With that, they are able to make their own wealth. You people has to understand share market is going to have a risk and you should know how to balance your risk. Don't try to invest everything in one stock. Try to buy at least 15-30 stocks as we talked earlier and 3 to 5 sectors and try to invest your money, whatever you are wanted to invest in an equities. Say major part of the equities, you have to invest your savings at the young age so that you are able to make your wealth considerably good pace from 5 to 10 years when you are in market. 10 years to 20 years, it will give complete returns. You don't have to invest anything in market. Whatever you earn, you can reinvest in the market. You can continue the stocks which are performing very well and which are not performing. Those stocks you can sell and that money you can invest in where is your running horses which are giving very good returns to you. When you are investing in a share market, you should keep very long. Sometimes what will happen in the share market, the market may go down because of various things, the war kind of situations, socio-political situations, or any pandemics, market will go down. During that time, whatever the money you are invested, suppose you have started your investment during that time, there is a chances of losing 30 to 40% or up to 60% also your invested value. Don't get panic. Just hold your investment, keep buying more shares at lower price, which are a very good companies. Normally, any good companies, if you go big companies like Reliance, ITC, Asian Paints, Birla, Aditya Birla Group companies, these companies always try to give a 15% to 20% a considerable good returns, and over and above they will try to give dividend regularly. Apart from that, you stands to get a chance of getting the bonus shares also. Your equity will be multiplied and your average cost will come down when you get a bonus shares. Take an example of bonus shares. PSU companies very regularly gives. You take BPCL, IOC. So these are the companies you can just refer the what value you are going to get it. If the people who bought Indian Oil Corporation 1.5 year back or 2 years approximately, they got an 1:4 bonus issue also. The price was at the time, it was 100 rupees or 90 plus it was there. Their average cost becomes 70 rupees. If today consider the Indian oil price, it reached 196. From there, now it is 170 plus. Dividend history, if you see, dividend we get around 10% plus, which is a much better than bank interest. Another example of dividend I wanted to mention here, if you go on see PFC, REC, 2 years back, the price was around 90 plus. Today, 500 plus. Both are quoting in the exchanges, and the dividend ratio is also very good. Before closing, just I wanted to touch upon few points. Investment criteria you should follow while investing. See the business interest of the company, promoters, what they are and how they are into business and how long they are into business, what kind of products they are into it, and you should know the companies which are investing very well known to you. Those companies normally they are into market from very long and they are going to be in very long and services. And secondly, you should know market cap of the company which you are going to invest. Ensure at least 500 crores are above market cap so that you have a fair chances of investing and going to get good returns in a long run. See profit ratio, how they are performing, competition, how it is going to be, and see quantitative and qualitative things both. Sometimes, if you are only go with the quality, you may not be able to make it. If you go only with the quantity, you may lose money also. So, where quantity need to be looked upon, where the beaten down stocks are there, and which are going to be value additions and value creation stocks coming years, those stocks you identify, try to play quantity game in that. Quality game you need to see in the blue chip companies, and you can able to invest in a balanced way and maintain your portfolio in a balanced way. As we already talked about, apart from the equities, you try to invest in mutual funds, gold, and real estate. Ensure real estate and total your investment or total your net worth, it is not going to cross more than 40%, because real estate is always considered a good option but illiquid. When you want money, you cannot able to get it immediately. Equities, mutual funds, gold can give you a liquidity immediately. So try to balance your investment journey along with the equities and rest of the things. So consider investing in equities, keeping in mind equities are going to have a market risk. Apart from that, volatility in the market and lot of other conditions will force the market to go down, but eventually market will come up in a year to two. So you should know to hold up your investment in a market each and every time, even it is going down or going up considerably. If you see 5 to 10 years, you can able to withstand in the market, you can able to create a good wealth from your investment, at least a 2 to 5x in a 5 to 10 years horizon. Thank you. Good night. Signing off. MVVS Reddy, Valtruvira.